Hey guys, it's Ken McElroy here. And as you guys know, I grew my career on finding properties that cash flowed so that I personally could become financially free. And of course, I've taught people how to do that over the years. The question is can we still find cash flowing properties? I decided to do a short video on how to find cash flowing properties in minutes. And I did this in minutes, guys, and I did it all on the internet from my desk. And so we're going to get right into it. So obviously, you guys have all heard of Zillow. It's really evolving into all kinds of stuff. And so are a lot of other platforms. So these are available to you. And you guys can do all of this from home. And so I started to find properties that were low price, that had big rents. And so the number one thing that I want you to know is that what you're trying to look for is a large gap between the rent and the mortgage. And how do you know where the mortgage is? And so that's the big question, because a lot of people, they don't know. And so here's the cool part. This is actually the best part. So Zillow actually shows you right here the estimated payment for this house at $110,000 is $499 a month, the estimated mortgage payment. So you already know this. You already know that with 20% down, your estimated payment based on today's rates is $499 a month. There are some steps you have to do later to verify this information, but this is a great example of a property. It's a 3-bedroom, 2-bath, 1,320 square foot home. So this property isn't particularly beautiful, okay? So as you guys can see, it needs landscaping, it needs some basic TLC, that's for sure, but it is for sale for $110,000. So now let's take a look at what Zillow thinks the estimated rent would be. And this particular property, based on the rental value, this property rents for about $1,200. Now, you have to verify this yourself, okay? But this information is on the internet. I found it in 1 minute. I found this property and it was all on there. $110,000 for the house, $499 for the mortgage payment, and $1,200 for the rent. Now let's take a look at the house itself. There's a couple things I liked about this house. It has new wood floors, new wood burning phone, upgraded gas, cooktop and oven, new flow toilets, vanities in the bathrooms, new light fixtures, upgraded cabinets. It still needs flooring in the bathrooms and the kitchens. That's good to know. But also, in 2018, they put on a new roof. One of the things that can kill you in real estate is all that capital work after you buy something. Look at this property. It's not bad. The kitchen's nice. You know, the living room's nice. It's decent. It's a rental. Don't get too concerned about the way it looks from the outside, because you can clean that up with just some basic landscaping. But here's the point. What we're trying to do is look for a large gap between the rent and the mortgage, okay? We know the mortgage is $499 and we know the rent is $1,200. Obviously, you have to verify both of those. But this is a very good start. The difference between $499 and $1,200 is $700. So you have a $700 window to work with. That is potential cash flow. Now, it's not going to all be cash flow because there are expenses. We're going to go into that next. So here's another thing on Zillow. They gave me this monthly cost. Principal and interest is $380. Property taxes, $81. Home insurance, $39 a month. Now, again, you got to verify it. No HOA, that's good. Utilities are paid by the tenant. Okay, so they give you a breakdown, and that $499, to my surprise, actually includes property taxes and homeowners insurance, etc. So that's even better. So now you gotta take a look at, okay, what are the other things that it might not consider? All right, so we know that the rent's $1,200, but you got to add some vacancy in there. And this, of course, is going to be market to market and based on the demand for the property. And this might kill it. So in other words, there might be 50% vacant in that market. You would want to stay away. But there might be 100% occupancy too. This is something that you need to check. But for purposes of this video, I did 1 month over 12 months of vacancy. 12 months at 100 is $1,200, so $100 a month. So I added a vacancy in there of $100 a month. I took the principal and interest, the tax and insurance, just $499 or $500 a month. I added $100 a month for repairs, and I said, you know what? I can manage this one myself. It's just one property. If you don't, you need to add that in. So with repairs and vacancy, I cash flow about $500 a month or $6,000 a year. Okay, this is on the internet right now. I'm not going to obviously buy this property. I'm just trying to show you how to do this. Now, there might be other expenses. There might be other capital work. That's why I showed you that there was new roof, new flooring, new appliances, etc., because those are things that can kill you here because those are real costs. But somebody's already done that. There is some carpet and stuff that needs to be done, and maybe that's $1,000 or $2,000. But regardless, you're going to cash flow, let's say somewhere about $500 a month, $400 a month, $300 a month. Still good. These are positive cash flowing properties. I found this, guys, in less than 5 minutes on the internet. All I was trying to do was find a big gap between the rent and a big gap between the expenses and find a big cash flow. That's all I was trying to do. And so if I can do this, you can do this too. And I just did it for the video for you. This property cash flows $6,000 a year. So now you're at the next step. You know that this might be a good deal. It might not be a good deal. You got to check. Is that a true rent number? Are there more operating expenses? Is this cash flow correct? All those things you got to check. But this is super encouraging. You got almost $500 a month cash flow on this property. That's $110,000. So now we go to the next step. Now you know this is a potential. This is a potential property that will cash flow. So the key is that you want to find 8 or 10 or 20 of these deals. So that if you find 10 of these deals, you're going to find $60,000 a year of cash flow. That's what we're trying to do here. We're trying to create financial freedom for you. Now, let's go into the next scenario, because a lot of you are saying, I don't have the money. I don't have the money for the down payment. How am I going to buy a $110,000 house? I'm out of a job. I'll show you how. So the first thing you want to do is you want to make an offer. Now, here's the cool part, also on Zillow, is you've got a history of this property. The estimate for the property is 108 here, and this is where the property's been bumping around in 2012, 14, 2016, 2018. It's gone up. Now it's gone down from 2020. But the point is, at some point, guys, not very long ago, it was around 70 grand. That's the point of real estate investing. Now, the rents were lower here too, but the rents have gone up and the prices have gone up. So don't get too concerned about this chart. Just know, again, you make your money when you buy. In this particular case, I like this deal because it cash flows $500 a month. At least that's what I think it will right now. And so you may want to offer less. You may not want to offer less. Honestly, for me, I would probably just offer the full price, because if it does cash flow $500 a month, I don't really care about that extra $1,400 difference in the value. So we know that this property is $110,000. And so the question is, how do we buy it if we don't have any money at all? The first thing we do is we make an offer for $110K, and then we find the money. You can do those simultaneously. In other words, if you go to an investor and say, I think I found a property that cash flows $500 a month, you're going to raise their interest. They're going to say, show it to me. And you're going to walk through the numbers just like I did, and then you're going to make that offer with a lot more confidence because you maybe have a financial backer. That's how we do it today. Now, once you get rolling, you can put these things in escrow and then go back to your group of investors that you might have. You can use other people's money or OPM, or you can use yourself. It doesn't really matter. Point is, you need to find the money next in order to buy this for $110,000. And there's only two things that you need. One is the debt, and the other is the equity. So the down payment, we know 20% of $110,000 is $22,000. And you know that you're going to need a loan of about 80%, the difference between the 20%, for about $88,000. Now again, Zillow's already done this work for you. If you go look at the Zillow estimate and you can get pre-qualified, you're going to get your payments pretty darn close to that $500 a month for the principal and interest, the taxes, and the insurance. All that's kind of wrapped up in here. I'll let you guys go do that on your own, but you get the point. Maybe your rate's 2.5%, maybe it's 3.5%, maybe it's 4%. That's all going to cut into your cash flow. That's all it is. But the point is, you just got to go find the money for the down payment, and you got to find the loan. And honestly, the loan is pretty easy, because now you have a property you take to a mortgage broker or a bank, and you say, I want to buy this property, and then they start to work, because these people are in the business of putting loans on real estate. That's what they do for a living. And so then you have to negotiate the rate and the terms and all those kinds of things. The only thing you really got to do is find this down payment. And the truth is, guys, you can get 22 people at $1,000 each. You can get one person at $22,000. You can take money out of your retirement account. You can take a small piece of refinance out of something that you own. So the next piece is to say, okay, what kind of return is that going to be? This is what investors look for, and this is what you should be looking for. What is the return on my money? If you convince somebody to give you that $22,000 and they invest in that property, they want to know, is my money secure and what's my return? Because they're taking it out of a stock market, they're taking it out of the bank, they're taking it out of something, and they're giving it to you for some reason. That's if you're raising money. But even if you aren't raising money, you should be super clear on what the return on that money is. So in this particular case, if we have $6,000 of cash flow and a $22,000 down payment, that is a 27% return on your money. That's cash on cash. Now, this is how you raise money. This is why you don't need money to make money. Because all I've done in 5 minutes is find a property on Zillow for $110,000, get all the information off of Zillow. I still need to verify the expenses. I still need to verify the rent. I still need to make sure it doesn't need a lot of capital repairs because that can all eat away at your cash flow. In 5 minutes, I found something that was $6,000 a year on a $22,000 down payment that produces a 27% cash on cash return. Who doesn't want that? There's no way you guys are getting that sitting in a bank account. There's no way you guys are getting that in the stock market. There's no way a lot of people are getting these kinds of returns. So when you're looking for your $22,000 down payment, what you do is you show them that there's $6,000 in cash flow. Who's not going to invest in that when they know that they can make 27%? That's how this is done. You guys don't need any money. And so what you do is you cut a deal with the investor. You say, listen, I'll give you 20%, I'll give you 10%, I'll give you 15%, let's do a 50-50 deal. Whatever it is, you cut a deal, but you know you have $6,000 to play with and all you need is 22. So if you don't have the 22, you got to pay your investor and they got to pay you for all this work, and that's how you cut your partnership deal right here. But you do it with the real estate itself, you do it with the cash flow itself. You don't need the money. You just need a great deal with a great return, and that's how you find cash flow properties on the internet in minutes. You still need to verify all the information, of course, but this is how you raise money on a property by property basis, and investors love this stuff, and this is what they're looking for. If I can do this, you guys can do this. So good luck. So if you guys like this video and you like what you saw, just hit a thumbs up so lots of people can see this information as well. Thanks.